South China Morning Post, 27th of June 2023, Sri Lanka takes a 5-day vacation to deal with economic shocks as an impending restructure of its domestic debt. Local analysts are optimistic that the long-awaited domestic debt restructuring process will strengthen the reform roadmap agreed upon with the International Monetary Fund earlier this year as cash-strapped Sri Lanka starts it this week. The procedure will begin over the upcoming 5-day bank holiday weekend, extended with a special additional holiday on Friday just issued in the government gazette, according to Nandalal Weerasinghe, the head of the nation's central bank, who announced on Sunday. The procedure starts with the strategy's announcement and ends with its implementation after receiving cabinet and parliamentary approval. The government expects the entire process to conclude while the markets are closed during these 5 days, Weerasinghe stated. According to economists, the prolonged bank closure is intended to enable the market to withstand any shocks resulting from the reorganization process. According to Udayashan Jonas, chief strategist with Sri Lankan investment bank CAL, the long holiday would allow any day one loss, as the cash flows are adjusted in the banks, to be pushed to the next quarter. After a crippling economic crisis brought on by unmanageable debt levels and Sri Lanka's unprecedented default last year, the nation received $2.9 billion in financing from the IMF in March. One of the goals of the 48-month program is to reduce Sri Lanka's total public debt, which at the end of last year stood at a staggering $83.6 billion, or 128.1% of GDP, to below 95% of GDP by 2032 to make the debt load of the struggling country manageable. This includes the requirement to reconcile the $42 billion in domestic debt held in the form of loans, advances, treasury bills, and government bonds by Sri Lanka. According to experts, the conclusion of the domestic debt restructuring process, which should relieve the government's liquidity burden while improving debt sustainability and the country's overall economic stability, will determine the success of the IMF program. For instance, guarantees may be given to holders of external debt that their amount would still be returned in full even if they consent to a haircut lower than market value for their assets. However, according to Murtaza Jafferji, chair of the Sri Lankan think tank Advokata Institute, this is only feasible when the nation's debt is manageable. When we do the restructuring, the cut has to be deep enough so that Sri Lanka does not go into default again, he said to This Week in Asia. An internal study revealed that any shocks from the planned rearrangement of government bills held by the central bank would be manageable, according to central bank chief Weerasinghe earlier this month. Vocational optimization. Finance Minister Ranjit Singh Balapatiya stated in Parliament last week that there will be no cut-off during the restructuring process. At the same time, specifics of how other domestically held financial instruments will be reorganized are still unknown. A select pool of the remaining domestic debt, which includes treasury bonds, which accounted for about 30% of the total household debt at the end of last year, is to be reprofiled, suggesting that maturity dates and coupon payments will be lowered. According to CAL's Jonas, extending the maturity period of bonds is still required to get the nation's gross financing requirements down to the IMF recommended level. To reach this goal, he continued, we believe that bonds worth somewhere between 1.5 and 2 trillion Sri Lankan rupees, $4.9 billion to $6.5 billion, need to be pushed towards the long end. Early government plans said that this optimization would be voluntary and not coercive and that the lenders would be given some discretion in how to reduce losses. But as the government moves on with the restructuring, there might be some level of coercion, according to Jafferji. For instance, the interest on an older bond may be subject to a greater tax. Keeping undue loads at bay. Many people are still worried about the potential impact on financial markets and who will suffer the brunt of the reorganization because the ultimate approach is still up in the air. According to Jafferji, regulatory forbearance, which delays loan payments, may be implemented to reduce potential day-one losses. But according to Wav Jawardena, a former deputy governor of Sri Lanka's central bank, employee benefit programs like the Employee Provident Fund and Employees Trust Fund will suffer heavily throughout the restructuring. However, individual members wouldn't be impacted as long as inflows outweigh outflows, according to Jafferji. This entails controlling the number of people eligible to withdraw money from the accounts, most of whom are retirees. Salaries have increased due to inflation. Thus the percentage contribution is now higher. Therefore, he suggested that raising the retirement age could be used to control this. According to Jafferji, the key is to cast a wide net without permitting too many exceptions during the restructuring. To prevent placing an excessive burden on those being restructured,